BlackRock has a large percentage of a lot of the companies on the S&P, and they like to do that so that they can have control. You don't think that they're looking at these crypto market caps, 330 million, 430 million, 1 billion in Ondo, which we made a video on? You don't think they're looking at these protocols like licking their chops because they know that they're essentially going to be able to do like a hostile takeover kind of thing to where they'll be able to invest a lot, own a large percentage of the company, and then have a say in how DeFi works? Like, hey, maybe that's not good from an ethical, philosophical standpoint, but from a money-making standpoint for us, that is fantastic.
So I'm actually going to give you a little pushback. So I do think with BlackRock, I don't think they're going to invest shit into a Ondo or a Maple Finance or a Goldfinch, actually, as much as I like those projects. I don't think they're going to invest into it. And the reason is because there's going to have to be a player in the real world asset space that's actually abiding by the US regulatory framework. None of the projects that I stated above do so. And so BlackRock wouldn't put money into those guys long term or in any meaningful way. Let me say that. They may do something under the table, but in any meaningful way, I don't think they would do that. They would either create something, which I don't think they want to do. They would rather wait until someone already is abiding by the US regulatory framework. So that way it's a seamless transition. And BlackRock don't have to deal with any other regulatory hurdle. They don't want to deal with that, which is why they waited to file their spot ETFs for ETH and Bitcoin. Trust me, their ETH is going to get approved too, believe me. So yeah, I don't think they're going to actually invest into, once again, a Maple, a Goldfinch.
What do you think they're going to
buy? I don't know. There's going to be something that gets approved in the U.S. because it abides by the U.S. regulatory framework, like I said.
Protocol?
Like a certain protocol. Yeah, there's going to be an RWA protocol that follows our regulatory framework at some point.
So you think they seeded the 100 million and they're just waiting?
No. This 100 million is not to invest in some fucking project. It's to invest. That's for them. I don't know exactly what for. That's for them. If I had to speculate on what they're planning on tokenizing, it's going to be assets that they already hold. Obviously, they're not going to focus on someone else's assets. They got 10 trillion of them. And so real estate is obviously going to be one of the assets that they tokenize. You can look at the company Realio that they're also gearing up to work with in terms of real estate tokenization. Now, they're more bringing asset management on chain, kind of like a software as a service type business. But, you could basically bring private equity, real estate tokenization, any type of tokenization on chain. So a company like that, that's more of like an infrastructure, and maybe they can build something on top of that, or a company builds something on top of that, and they acquire that company, or they build it out themselves because it's already abiding by the U.S. regulatory framework. That's something I can see them stepping into versus investing their money into a Maple and all these other projects that we keep naming. But that's not to say that all these RWA protocols, because of BlackRock's validity stamp, they're going to pump no matter what. And so they're still great investments. I just wouldn't look at it as fundamentally part of the reason I'm buying them is because BlackRock's going to buy them. No. Part of the reason I'm going to buy them is because BlackRock solidifying themselves in a space as much as they have is only bullish for these other protocols. Plus, here's the reality, guys. Somebody disagree with me if you want, but you can't argue with me on this. RWA, real world asset tokenization, will probably be the largest market in capitalism that there is. Think about how many assets there are in the world. Period. Assets there are in the world. Not real estate, not stocks, everything. Now imagine bringing everything on chain. Now everything's not going to be on chain. But even a small percentage of that, it's going to be crazy. And obviously, eventually, as humans, we start to snowball effect to the point where that thing will eventually become infrastructure. And I just have to believe that assets on chain, because it makes more sense from a security standpoint, from a record keeping standpoint, from an immutability standpoint, from a composability standpoint, transferability. Everything is better on chain when it comes to real world assets. And so that's how I look at it, 100%.
I do think they're going to buy some of the protocols, to be honest.
Why?
I think they see the writing on the wall. Like, think about it this way. They filed for the ETH and Bitcoin ETF before it was like regulatory clarity. but them approving it added to the regulatory clarity.
Well, because, bro, they're BlackRock. They have ears to the wind. They know which direction things are going to at all times.
For sure.
And
I
so
agree.
they knew that approval was coming. That's the only reason they filed. They were not uncertain.
I'm not saying that.
It's even strategic with Larry Fink coming out and discussing tokenization, Bitcoin, Ethereum, all these things at the time he did. I mean, this is a guy who said he wouldn't want to touch it years ago, or I wouldn't want to comment on it, or whatever the hell he said years ago. And he did a full 180. He loves it. This is the future, according to him.
I can see BlackRock really loving Pendle Finance. 100%.
I agree. The idea, not the actual project, because it's not available in the U.S. That's the only reason. If it was, I'm 100%
All of
with
their
you.
products aren't available in the U.S. Some of
The most important one is not available in the U.S.
So institutional investors, it's not uncommon for them to, like what fucking FTX did, spin up some kind of fund overseas just so they can use it. Because, bro,
100%.
we know bond stripping is huge. And if people can speculate on future yields as well, especially with how we know interest rates are going to be for the next 20, 30 years, they're going to be really high and predictable. Like, bro.
Higher than they have been.
Yeah. I think even if it's a small amount, I think they're going to start speculating on these protocols. They know that DeFi is going to be a big thing. They already have a Bitcoin and ETH ETF. I think they want to be ahead of the curve. They might not go all in. Actually, I don't think they'll go all in because that's risky. But I think they'll speculate on a few. And I think that the investors that invest with them will be asking them to do it as well. Just like people were asking for Bitcoin and Ethereum ETFs and products to get access to through their 401ks and things like that.
Okay, let me rephrase. I don't think they'll put any institutional funds into these projects. But there are going to be guys who are part of BlackRock who's like, let's try this out. Maybe they got a small pool to the side, but just of the team, you know? Like, hey, let's try this out. They're not going to put any of their clients' funds into a Pendle Finance, into anything like that. That's just how I think. I can't see them buying it, but I know that they are looking at them like, whoa. Like, bro, if they looked into Pendle, yeah, I can see them looking at that, looking at bond stripping, thinking about loving the idea of separating the two on chain, going long the yield because you think yields are going to rise, or going long the value of the bond or the principal token because you think the price of bonds are going to go up, whatever their forecast would tell them. So I could see them loving that. I just can't see them risking anything in terms of a blemish on their reputation by investing, especially clients' funds, into anything that doesn't abide by the regulatory framework of the United States.
I wouldn't be surprised if they spin off a fund somewhere else and then they invest into that fund and have that fund have like a lot of stable investments but a small amount. Kind of like what JP Morgan did.
I can see, look,
like
we're getting to a middle
it's not
ground.
going to be obvious like, oh, BlackRock's holding Maple Finance.
No, it will be an SPV, special purpose vehicle, but with a team. There are no clients' funds. I think that's where we would meet perfectly in the middle, right there. So they would invest in these protocols, but not clients' funds.
I think, okay, probably not clients' funds, but maybe profits from clients' funds. Some BlackRock funds that they have somewhere.
So also, you got to think, they're not trying to make money at this point. They're about control
for sure,
and preservation. And so that's why they love treasuries, for example. Even in equities, their exposure is limited to ETFs. They love preservation. It's just that simple. They work with the Federal Reserve. They can't have anything go wrong. Nothing. And so I can't see them taking that risk with like, yo, Joe, you know what? I've been looking into this project overseas. Very small. But look, you've been our client for years, buddy. I was thinking about moving $250 million over to that project. What do you think about that? Joe's going to be like, actually, he's probably going to be like, you know what? Go ahead. It's BlackRock.
He's probably be like, what kind of ice cream do they use?
Yeah, no, but for real, he don't care. It's BlackRock. Larry Fink, oh, go ahead, Larry, you good. If Larry loses that money, now you got Jay Powell involved. He said, Larry, I thought the efficacy of your business was overstated, but I see, therefore, I was wrong. Jay Powell gets involved. Now everything goes to shit. So I just don't see him. investing into it once again. But, I don't want to get stuck on that because they will have some type of exposure to these projects. We just don't know exactly how, and it's not going to be clients' funds.
And it's not going to be obvious. Except
not
from,
at all.
Yeah, actually not at all.
Not at all.
There'll be a large increase in liquidity. Like I will go on a whim and say that if meme coins can reach a $62 billion market cap, I think RWAs will reach at least this cycle $200 billion market cap.
I'm being conservative. Yeah, I was gonna say 100 billion.
I would say at least $200 billion market cap. Because it's gonna
so in that's a pretty good range between 100 and 200 billion.
Because it's gonna be protocols like I think Pendle will get to a $15-20 billion market cap on its own, right? Centrifuge, probably Ondo too. As weird as it sounds, watch our video if you want to know why we say that.
Guys, I'm just gotta be real. So I feel like supply.
You don't have to be. You don't. Like,
no, supply and demand imbalances have been in the forefront of our brain when it comes to bonds, when it comes to Bitcoin. And it's going to be the same thing with it's the same thing now with RWAs. A lot of these projects, they have a good amount of assets on chain, either tokenized, and you could say TVL. Like they have a very good amount of TVL, usually outpacing the volume. And also, it's usually in the billions. What did you say Pendle had? You said it.
Over $2 billion
right now,
in TVL.
Right now, they have that. So you can only imagine that is the supply-demand imbalance, and we have spotted a market inefficiency in the fundamental value of these projects. And so that's why we're so bullish on them. Not financial advice, guys, just a suggestion. But that's why we're very bullish on RWAs, because those supply-demand imbalances exist in way more places than we look.